Hello traders, you know how we do. This is Leading Forex YouTube channel and then Facebook Live. We are here to give you some analysis like we do always, and then also forecast as to what this week coming will be in the Forex market. I welcome you if this is your first time. Charlie, currently I am in a hotel in Accra. I have actually traveled to Accra, and this is where I am doing this video right now. So I'm not at home at all. I'm not at home. So I hope and pray that this video is going to be much clearer, the way you should see it, and then the way you should have it. Okay, this is Leading Forex YouTube channel, and this is Leading Forex Facebook Live. And my name is Kofi, your admin. We also have Leading Forex Telegram page. And I always tell you, you will find the description of this video. In this description, you will find the link to the Telegram page. So when you go to the description of this video right away, you will find the link to the Telegram page where you can join us for free. We don't charge you anything there. So join us. We give signals over there too. And then whatever forecast we give during the weekends like this, we try to track and to be able to give you updates as to what is happening in the market. Okay. So today is Saturday 30th of May. The month has ended. May has almost ended. By Monday, we will be in a new month. That will be June. Okay. So we are looking at how the market went. You know, we gave some forecast. We gave some weekend forecast and then midweek forecast. And then also some updates here and there. So first of all, this video is going to be a bit longer today because I'm going to reveal some information to you. Okay, I'm going to give you some information that I'm sure will add up. I know you know much about Forex already, but just to add up something, and then also to give the advantage to the new traders to also have enough information about Forex and how the whole Forex market operates or works. Okay, so before we do that, our review over the weekend, all our trades went into profit and gave us the TPs we expected. We had TPs of 100 pips and 80 pips, and we gave 11 trades. We had all of them for profit. And then also quickly, because we had all those trades for profit, we had to come your way with midweek signals. The whole thing is that those of you who have been on the Telegram page, at the beginning of the midweek signals, they started going against us, but thank God they all came back into profit, and then I ordered all of us to close those trades in profit. So it is good for you to be on the Telegram page after watching us on Facebook or YouTube. You need to be on the Telegram page where we monitor and track the process of the forecast we have given. So those of you who are going to try our signals from this review, make sure that you join the Telegram page so that we can be updating you as to what to do so that you don't get lost or you don't get missing in the game. All right. So quickly, before we go into this week's review to look at certain things, I want us to talk about something. You might be wondering, this Forex market, a whole lot of people are giving out information here and there on YouTube, on blogs. You see a whole lot of information on various websites and the rest. And by way, I don't know, let me put it this way, I don't know how you came to know Forex and how you were convinced to join Forex. But there's one thing I need to let you know, that there's no fear in Forex. People think Forex is a scam. There are others who also think, hey, Forex is not for you and I. There are also people who have the perception that to make it in Forex, you need to have huge money to invest. A whole lot of perceptions here and there. These perceptions are there. You cannot change them. Everyone and his or her experience. But there's one thing I want you to know. Today, I want us to talk about brokers. In my last video, I talked about brokers, and then I told you I'll have to do that in a new video. So today, I just want to give you a little background about brokers so that this background information, I am sure, will help you to know what to do. Because if you are going to put your money into any investment, you first have to know the details of that investment before you put in your money. Or if you are going to invest your money into any company, you first of all have to know much about the company. They have to give you their policies, rules and regulations, study it and be sure before you even go in to put your money. So you need to know what brokers are and how they operate. Now, the word broker can be applied in any field of work. And what it simply means is that when you even Google who is a broker or what is a broker, a simple definition that you'll be given, if I want to quote, says that a person who buys and sells goods and services to others, or a person who negotiates or arranges. So this is the definition the general definition you will get about brokers if you find out who is a broker. So in any field of work, anyone that arranges or negotiates businesses on behalf of people is a broker, or anyone who buys and sells goods and services is also a broker. This is the general message you should understand about who a broker is. You need to know this. It's as simple as that. Now let's apply this definition in our world of Forex. Okay. Now when we come to our world of Forex, take note. Forex was there long ago, but Forex had not come on the internet like we are having it today. We had Forex long time ago, commodities and stocks trading, and then futures. And when we talk about futures, futures include Forex. So we had Forex trading long time ago, and it was difficult for people to trade Forex because of the government regulations. It was very difficult for people to trade Forex because of government regulations. And then also the higher rate of government trying to make sure they monetize or they regulate interest rates and the rest really made it very difficult for you and I to trade Forex. But that was in the 90s, okay? So along the line, something happened. And that is what I want to tell you. Along the line, something happened. Now, how did we come into this online trading which you and I are doing today? This online trading you and I came into simply means that you and I are retail Forex traders. They used to be traders, but retail Forex traders was something difficult to do because of this government regulations about the whole Forex thing and the money involved and a whole lot. I wouldn't want to go into those details. I just want to paraphrase things for you to easily understand. So, along the line, there was a need for agencies to be set up to really look at rules, regulations, and things about Forex. Okay? So, what happened is that in the 90s, we had these banks who were the only operators of Forex. You have to go to the bank that deals with Forex. You could not get any other where to just go and then transact. You have to go and deal directly with the banks. Now, when we came up in the world of internet, when we started having internet evolving, we realized that a lot of good things were coming on the internet. And the fact that today we have good things like YouTube, which I'm sure most of you are watching me from, we have good things that had come on the internet that you can all get to think of. Facebook, which we are all using today, WhatsApp, Twitter, Instagram. These are all good things that had come on the internet. Today, goods and services. The richest man in the world, Bezos, you all know where he invests some of his monies. You understand? Into real estate, Amazon, and the rest. So, Jeff Bezos and co had to become the millionaires of today because of internet. So, there was really the need for us to move certain businesses onto the internet. I don't know if you get it. So, businesses started moving online. So, when businesses started moving online, people sought into the idea and said there was a need for Forex to also move online. So, before Forex could move online, there was a company that was formed by the US government. This company is known as CFTC. CFTC. This group or institution that was established by the US government was established mainly to regulate the activities of Forex in the US. It was a company or an institution established by the US government. Another time I will be talking about CFTs alone. I will take that company known as CFTC. I'll take that company and give you breakdown as to how this company came and what they are doing. But they are a regulatory body. The Forex market, they are a Forex regulatory body. Now let me give you the full meaning of CFTC so that you will get it right. CFTC simply means Commodities Futures Trading Commission. Commodities Futures Trading Commission. Commodities Futures Trading Commission. So commodity is the C, futures is the F, and in futures we have Forex. Okay? And then Trading Commission. So there was this commission formed. And this commission was a regulatory body to monitor the activities of Forex and make sure that things are put in place right. People get it right. People are not cheated. Retailers who are coming into the banks and the rest are not cheated. And then the banks also are not cheated. So this regulatory body came into being, into existence. In another video, I may tell you who are the institutions that formed maybe the board of directors for this company. So now, when this company came into being, formed by the US government, the company started working, the commission started working, which is the CFTC company or commission, started working. And then they realized that there was a need to take Forex onto the internet. So this commission decided to actually pass some bills into law. They proposed some bills that the government should look at and make sure that we move Forex onto the internet. So this commission was actually formed in the year 1974. This commission was formed in the year 1974. So this commission started a great work by trying to make sure that the Forex market comes on the internet. So they passed some bills. They came out with two major bills to be passed by government to be able to enable Forex to be moved onto the internet. And let me talk about these bills. One of the bills is the Commodity Exchange Act. Okay, it was a bill, but now it has been passed into an act. It's now a law. Okay, and then we also had Commodity Futures Modernization Act. So it was actually this act that brought Forex onto the internet. There was a need to modernize things. The way we do things, there was a need for us to modernize things. So the Forex market felt there was a need to have some modernization come onto the internet to be able to operate. So this Commodity Futures Modernization Act, and like I said, futures includes Forex, which is currencies. So this act, which was actually proposed as a bill by this commission known as CFTC, the government accepted these bills into acts or into law. So they became laws. And when they became laws, we now had Forex being moved from the normal physical local stations onto the internet. So the brokers, there was a need for us to have brokers who will now operate Forex on the internet. Okay, so companies started putting their heads together to form brokers so that they can actually take Forex from the ordinary interbanks and then bring it onto the internet. So these companies came into contact with each other. People started forming companies. Forex brokers started emerging. Let me put it that way. So we started having Forex brokers emerging. So these Forex brokers that emerged became a group of companies that link with the interbanks to get liquidity from them and then pass it on to we, the retail traders. So it means you and I could sit on the internet and then buy currencies without going to the local banks to do the transaction. And the companies that could bring us this business online are the brokers. So we started having brokers dealing with the banks and then giving us the access, the platforms to be able to transact or to be able to do business online, buy currencies, buy features, buy commodities, and other stuff online. So this is how we came to have brokers on the internet. Now, there's something I need to add when it comes to these brokers. Now, when these brokers came up, when we started having these brokers, something happened, and I need to let you know that today. Now, I don't know which broker you are using, okay, but there's a major problem we are facing in the world right now, currently, when it comes to brokers, and that is what I want to tell you. There is no one international regulatory body that regulates Forex worldwide. We don't have that. Again, let me repeat. There is no one international regulatory body that regulates Forex trading worldwide. We don't have that. We only have regulatory bodies in various countries set by governments of those countries. So in US, for instance, we have this regulatory body I have just mentioned, CFTC, which is a regulatory body based in US. And so this regulatory body cannot extend its services across board or outside the shores of US. Do you get it? So it is only brokers in US that this institution can regulate. So this institution cannot regulate, even if there is a need to regulate, unless the government of that country accept them, decide to partner with them, before this institution can regulate brokers in a different country. And let me give you a typical example. CFTC is a regulatory body based in the US that regulates all the brokers in US. All right? Before you be given a license to operate as a broker in US, to bring Forex online for retail traders like you and I to trade, you need approval from this institution. Now, this institution, they cannot come to maybe Spain or England or Ghana, where I am. They cannot just come here and say that, okay, all the brokers in England or all the brokers in Spain or all the brokers in Ghana, they want to start regulating them. No, it is not going to be possible. Unless the government of maybe UK or England or the government of Spain or Germany decides that there's a need to partner with maybe CFTC as a regulatory body in their country. And when that happens, that is when this regulatory body can extend its services into another country. If that do not happen, we will not have that. So there are countries who also have their own regulatory bodies. So when you go to Australia, we have regulatory bodies in Australia that regulate brokers in Australia. We have regulatory bodies in UK that regulate brokers in UK. US and other countries, they all have their regulatory bodies. And the thing is that, I'm saying the problem here is that there is no one international regulatory body that regulates all. Like a mother company that regulates all, no matter where you are, you fall under. No, we don't have that. And so because we don't have that, there are brokers who have capitalized on this, do I call it challenge or problem? There are brokers who have capitalized on this challenge, and they have come on the internet and they are just doing things the way they like. They can choose to cheat you. They can choose to do whatever they want to do to you, and you have no one to complain to. You have no one to complain to, because if that broker comes and the broker is not under a very strict regulatory body, they can choose to do whatever they want to do to you, because you have no one to complain to, or you have no one to talk for you or to say, have a say in your issues. So you will hear people giving reviews that yes, they've deposited money with this broker. At the end, they want to withdraw, their money is locked up, and a whole lot, you hear a whole lot of reviews. The reason is because of this, because there's no one international regulatory body. So if you are a retail trader, a trader who trades for Forex online, like you and I, you have to actually look out for a broker that is well regulated in a country that you know. Okay, you have to look for a broker that is well regulated. So if you are, you agree with me that there are most of the brokers in US that are not open to the other countries. There are a lot of brokers in US right now. You cannot sign up for them in Ghana or in Nigeria, in Africa, even in parts of Europe. You cannot sign up for them. There are brokers in UK right now. If you are not in UK, you cannot sign up to them. They won't allow you. They won't accept you as a client because they have regulatory bodies who have given them strict rules to follow. So they follow. Do you get it? There are also brokers who are regulated by minor regulatory bodies, and they have their way to do everything they want, and then they accept clients worldwide. There are also good brokers who accept clients worldwide, but are still regulated by some of these strong institutions, regulatory bodies. And that is what, if you are a broker, if you are a retail trader, okay? If you are a retail forex trader, what I mean by retail forex trader is someone that trades forex online. Anyone trading forex online is a retail forex trader. If you are a retail forex trader, before you invest your money, you have to first of all look out for a good broker. And one of the things to know which broker is good is to have a broker that is well regulated by strong regulatory institutions. Do you get it? Good. Maybe in another video, I'll tell you some of the strong regulatory bodies we have in the world. But in US, this is one of them, the one I've just mentioned. That is the CFTC. It's one of the strongest regulatory bodies that regulates brokers in US. So most brokers that are not in, most brokers in US that are not able to extend their services to other countries is because of this regulatory body. They have given them strict rules to follow, so they follow. Some of these brokers, this regulatory body tell them the spread they should give. Some of them, they tell them the leverage they should give. Yes, very strict. And people are dealing with them because they feel the regulatory bodies are very strict in dealing to help we the retailers. Now, let me say this, and for you to understand that some of these regulatory bodies, they are there to fight for us, with the retail traders. That is the basis of these bodies working. Okay, they are there to ensure that the services we receive from brokers are well satisfied. That is their basis for being available, and that is their reasons for making strict rules for brokers to follow. So when you are dealing with a broker and a broker tells you that these are our company rules, they have been able to carve out those company rules as a result of the rules given to them by their regulators. But the bottom line of this matter is that we have good brokers and we have bad brokers. Bad brokers in the sense that they do not have strong regulatory bodies, and so they take the advantage to do whatever they want to retail traders. So it is good for you to look out for the good brokers and then know that. So one of the things to know which broker is good is the regulatory body, which is actually regulating that broker. You need to be able to know. That is that. Now, there are different types of brokers on the internet. And let me explain that before I move on to today's forecast and then signals for the course of the week. Now, there are two main types of brokers on the internet. And these are the deal index brokers or the DD. The deal index brokers known as the DD, and then the no deal index brokers. Now, the deal index brokers are also known as market makers. The deal index brokers are also known as what? Market makers. And then we have the no deal index brokers. And under the no deal index brokers, we have another two brokers under the no deal index brokers. So we have these two major brokers, deal index brokers, which is known as market makers, and then no deal index brokers. But under no deal index brokers, we have another 2 sub brokers. And those sub 2 brokers are the STP brokers and then ECN plus STP brokers. So you often hear the word, we are ECN brokers, we are ECN broker, we are ECN. So an ECN broker is a broker that is both ECN and STP. We have these 2 joining to become a broker. And then we also have only STP. And these 2 brokers are all under the no deal index brokers. Okay. Now, let me explain these keywords I have just mentioned. The STP broker, which is under the no deal index broker, the STP simply means straight through process. Straight through process. I will explain that later. And then the ECN also means electronic communication network. ECN, electronic communication network. So we have electronic communication network in addition to straight through process, STP. So these 2, they are all under the no deal index brokers. Now, let me explain these 2 further and then end there, and then we go on to our forecast for the week. Now, the DD brokers, which is the deal index brokers, what they do is that, let me explain so that you know the kind of broker you are dealing with. All these groups of brokers I've mentioned are good brokers because the names of the brokers do not determine whether they are good or not. The name alone do not determine. It is the regulatory bodies that determine. But aside that, there are certain things that happen in all these brokers that you as a trader need to know, so that when you are choosing what broker to choose from, you will know best. Now, I may be able to recommend some brokers to you, but the unfortunate thing is that I may mention a broker right now, but in your country, that broker may not be accepting clients from there. And that is the danger of it, or the problem we have. Like I said, I may mention the broker I'm using here in Ghana, but maybe that broker might not be offering its service to people in Iran, or they might not be offering their services to people in Nigeria, or they might not be offering their services to people in the UK. So if I mention that broker right now, there will still be limitations. Do you get it? Good. So now, the deal index brokers, this is what they do, and this is how they operate. All right? This is how they operate. So let me just tell you about how they operate, so that you, if you have an account with such a broker, you understand them, the way they operate. Now, the deal index brokers, what they do is that they make profit through spread. That is one of the ways they make their profit. The spread is the price difference between the bidding price and the asking price. Maybe in another video I will explain into detail all these ways. So this is what makes the spread. The difference between the asking price and then the bidding price. There's a gap between that. Maybe now you may not be able to understand, but those who are already good traders maybe know the details of what I'm talking about. So they make their profit through spread. That is one of the things. Now, the deal index brokers, what they simply mean is that they control the affairs of Forex. They control, they have a desk. So it means when you sign up with that broker and you are about to buy or sell, when you enter into a trade to buy or sell, they control the affairs. And let me explain what I mean by they control the affairs. Now, what they do is that they have other clients that have signed up to them. Okay, so other clients that have signed up to that broker as a deal index broker, when we place an order, when you place an order, let's say you are with broker A, I am also with broker A, and that brother is also with broker A. So 3 of us, we are all with the same broker. Now, when we all choose to enter into a currency pair, maybe Euro USD, when I choose to sell, and then you in your country choose to buy, and then another person somewhere choose to sell or also buy. Over here, we'll be having 2 people maybe buying and 1 person selling. So the deal index broker, what they do is that they look for traders who are trading opposite each other. So if I am selling and you are buying, and we are all with broker A, what the deal index broker will do is that they will match you and I, our trade, so that the 2 of us can trade against each other. It means we are all coming with our monies. You are buying and I am selling. So if I am selling and you are buying, then it is possible to match you and I so that we can negotiate, we can sell. I can sell to you, then you buy from me. Do you get the analogy? So their work is to pair. Traders. Or when they come through their traders, traders who have signed up to them, and they realize that there is no one taking the opposite of what you are trading, then what they have to do is that they will match you to a liquidity bank or institution. So they choose to match you. They will then say, okay, since there is no any other trader, let me say I am buying Euro USD, and there's no any trader buying Euro USD with that broker as at that moment. What they can do is that they will match me to an external body, which is maybe with a bank or an institution, which is doing the opposite of what I am doing. So they will match the two of us to trade together. So this is what they do. This is another thing they do. Now, the dealing desk brokers, they also have the opportunity to trade against us. Okay? And it's easy. When you are making profit, when you are with that broker, the dealing desk broker, when you are with them and you are making profit, you enter into a trade and that trade is in profit, the broker will not trade against you. Now, when the trader feels like you are making losses, you are in a loss, they can choose to trade against you because your money is going waste and they feel there's a need to collect that money. So they can choose to trade against you. Just the way they have to match you to somebody to collect your money. If there's nobody to match to, or there's somebody to match to, but they feel you are not a good trader, so you will just lose that money. So it's better they trade against you and take that money. They can do it. It is part of their regulation, so they can do it. So they have the opportunity to match two traders to trade. They have the opportunity to match you as a trader to an external institution to trade together. And they also have the opportunity to trade against you, especially when you are in a loss. So when you set up a trade and that trade is going against you, it is possible your broker can jump in and start trading against you. Since you are maybe selling and it is in great loss, they can choose to start buying with you. So they can choose to be buying because you are selling and you are losing. So they will be buying so that whilst you are losing, they are making the profit. It is not as if they are being wicked or they don't like you. But this is business. You are actually going to throw away that money to somebody else. So what is wrong if they choose to take it away from you? They haven't done anything bad. Do you get it? So I don't want you to get the perception that, oh, since my broker can trade against me, then it means my broker will manipulate things or my broker will be wicked to me or my broker can... I don't want you to get that. That's the perception I don't want you to get. But the reality is that if you are losing your money, you could be losing your money to another trader or losing your money to an institution, a bank. So what is wrong if they choose to take that money, trade against you and take that money? But if you are in a winning trade, there is no way your broker will trade against you because they don't want to lose their money to you because they know you are winning. So they will prefer to match you to another losing trader or match you to an institution to trade with. They don't like it, they don't want any trouble. So it is good that if you are a trader and you always want to trade and it is a dealing desk broker, you should put these things in mind. Then doesn't mean that when you are trading and you are losing, your broker is trading against you. No. I also want you to get that clear. It is possible you could be trading against a colleague somewhere. They have matched a colleague to you and you guys are losing. Or you are losing and he is gaining. Or they have matched you to an institution and the institution is making the profits you are losing. So I don't want you to believe that once you start trading and you are losing, it means that your broker is trading against you. It's possible they can straight away start trading or start trading against you because you are losing the money. So there's a need to collect it. Good. So these are the things the dealing desk brokers, they do. This is their services that they offer. That is what they do. So another thing is that they control price. That's another thing you need to know. They control price. They control price. Since they have to match you to someone and then they make their profit through spread. If the spread the bank is giving to them it's a difference of 1 pip. They can choose to add 1 pip or 2 pips to it, so that will be their commission, that will be their profit. So yes, they add their spread. But again, the regulatory bodies are there to make sure that a broker do not add extra or more spread than they're supposed to add. That is what the regulatory bodies they do. They make sure that if you are to add spread, you don't add more than supposed to. So if you are with a broker who do not have strong regulatory bodies, that one they can choose to add any spread they want. If it is a deal index broker, they can choose to add any spread that they want, because no one can stop them or no one can say anything to them. That is another reason I always say you need to make sure that you have a broker that is strongly well regulated. You need to. All right. Now let me continue quick. I think the information I have today is so much. So that is what will happen. So the 3 things to remember when you are talking about deal index brokers or market makers: they pair you to other traders internally, or they can choose to pair you to an external institution to trade with, or they themselves can choose to trade against you. When they feel you are losing money, you are just a loser, they can trade against you. So these are their work. So they actually do the whole work by themselves, and then they make their profit through the spread. As usual, they make their profit through the spread. So get that. Now let's talk about STP brokers. That is the no deal index brokers. The word no here is telling you that they don't do the pairing. The word no deal index means that they don't do the pairing. This one is an internet connected weaving together, but there's difference. Let me explain. The STP, what they do is that if you sign up with a broker that is an STP broker, what they do is that immediately you enter into a trade, they will pass you on straightforward, or match you on. The system will match you to the liquidity institution. I mean the banks or the institutions that are trading. And then their job is to just match you. But before they match you, what they do is that they take the pain to comb through all these liquidity companies or institutions that are trading, the interbanks. They take the pain to comb through them. And then they look for the one that is having the low spread, or the one that is having the lower rate. I mean, that is very good for you. Then they match you to that institution. Let's say at the time you were about to buy maybe Euro USD, there were a lot of spread from different banks. Maybe at that time some banks were giving 5 pips spread, some banks were giving 3 pips spread, some banks were giving 1 pip spread. So what they will do is that, okay, if an interbank somewhere is giving 5 pip spread, another one is giving 3 pip spread, and one is giving 1 pip spread, then what they will do is that, okay, they will go for the 1 pip spread institution. Then they will match you to that institution. But instead of giving you exactly that 1 pip spread, what they will do is that they may choose to add another one to that one, so that it will become 2, so that they can make that 1 pip different as profit, because they took the pain to comb through. They have also done the work for you. They took their time to go through the internet to get you the best one with the lower rate. So once they get you one with 5, one with 3, and one with one, just 1 pip, then they will make it maybe, okay, let's also add our profit. Let's add 1. The work we did for this guy, let's add 1. So the pips difference will now be 2. And when they give you a pips of 2 difference, it's still better than the one with 5. It's still better than the one with 3. So you get a difference. So this is what the STP brokers, they do. They do not have any like to pair you to this trader or pair you, but they pair you to external traders. But before they pair you, the system pairs you. The system combs through to get you the one with the lower spread, so that they could add their little profit on it. Do you get it? So that is the STP, which is one of the no deal index brokers. That's the services they provide. And then there's what else do I have to tell you about that? Okay, I think that is enough about the STP brokers and the no deal index. And then the ECN plus the STP brokers. The ECN brokers, this is what they do. What they do is that they also pair you automatically. They pair you to other external traders automatically. That is what they do. They don't have business wasting their time doing all that. And then, okay, maybe let me add something I forgot about the STP brokers. Now, the STP brokers, one thing you realize that is that since they also have a little spread that they have put on the trade, what it means is that anytime that external institution widen their spread, then it means indirectly the broker will also widen the spread, because they have matched you to a broker somewhere, or they have matched you to a different trading company somewhere, and that trading company, as at the moment you were about to trade, the spread was maybe just 1 pip difference or 2 pips difference, but as time goes on, after maybe 2 hours or 3 hours, they decided to change the spread. Once the spread changes, because at that moment you are already in partnership with that company, when the company changes their spread or the bank changes their spread, it will automatically change on your MT4 or MT5. You will see the spread will widen. So you continue to see differences in spread, changes in spread here and there. Okay, you see changes in spread. That is why some of the brokers, when the market closes, you will see that the spread at which you enter the market is no more the same. You see that when the market closes, then the spread will widen. The gap will be very huge, and you are like, what is happening? Why is this broker at 9 p.m. when the market had closed, or when the market is closed, the spread has widened like that? The reason is because they are STP brokers. And whenever the company they have linked you to widen their spread, they also have to automatically do the same. So that is how come you see those changes in spread when it happens. So whenever the market closes, or at one particular point you see that the spread is widened, you should know that you are dealing with an STP broker. And it is because the institution they have linked you to trade with has widened their spread. So they have to automatically widen theirs too, or they have to automatically make it happen for you to see. So that is what happens. Now, the ECM brokers, they have fixed spread. When you enter into the trade today with 1 pip difference, until you close the trade, if it is going to take you 1 month, or if it's going to take you 2 months to close that trade, the difference will still be 1 in terms of spread. Once it is fixed, it is fixed. The spread is fixed, is fixed. That is the ECN. The ECN STP brokers. For them, they have fixed spread. You will not be seeing changes in spread widening here and there. And those brokers, they are hard to find. They are hard to find. People say they are the best brokers because of this spread widening thing. But other brokers, they are not bad. They are all good. But these are the conditions you need to know. But because people say the ECM brokers plus STP brokers, they are the best, those brokers also flex their muscles. They kind of bluff on us. They will tell you you need this huge amount of money to be able to be an ECM broker, or to be able to sign up as an ECM trader, and here and there. I know you guys know what I'm talking about. So these ECM brokers, these are some of the things they flex. But the truth of the matter is that they are good, but then doesn't mean they are the best. Other brokers are equally good if you understand these terms I have just mentioned. So ECM broker, they have fixed spread. So you might hear certain brokers advertising that they want to give you the lowest spread ever you can. They want to do whatever. Then you now understand the concept, what kind of broker you are dealing with. There could be STP broker, but may always want to give you the lower spread. When they come through the market, they will give you the lower spread, or choose to put something small that will be better than maybe the deal index, or that might be better than any other broker or whatsoever. So that is what you may get in terms of advert. But then doesn't mean other brokers are bad. They are all good brokers. But the best broker is to be able to know which broker is well regulated. If you happen to be with a broker that is well regulated, then you are with a very good broker. Then you are with a broker you can trust. It doesn't matter whether the broker is a deal index or market maker broker, or is a no deal index broker. Whichever that may come, Once there's a strong regulatory body backing the activities of that broker, you are good to go. Do you get it? What else can I add? Now, one more thing to add on terms of the ECN brokers. Another good thing the ECN brokers do is that they give you what we call sentiment. They give you the position of traders before you enter into the market. They came with the idea of sentiment. Before you enter into the market, they tell you the position of other traders in the market. They tell you that, oh, okay, you are about to buy Euro USD. We as an ECN broker want to give you this data. This is the position of other traders about the currency you are about to buy. So you decide whether you want to follow the crowd or you want to go against the crowd. So if 70% of traders are positioned for a buy on Euro USD, you as a trader who is now about to buy, do you want to go with the 70% who are buying or you want to go with the 30% who are selling? So they provide you with this data known as sentiment to guide you to be able to make the decision for yourself. So that is another good thing ECN brokers will provide you. So this is or these are the things the ECN brokers will give you who are under the no deal index broker. These are the information they will provide for you. These are some of the things they do. These are the services they offer. So when you hear sentiment, forex sentiment, the idea of forex sentiment came from the ECN brokers. They felt there was a need to let the trader know the position of other traders or other institutions in the market so that they will know how much to sell or how much to buy, whether to buy with the majority or buy with the minority or sell with the minority anyway. So if a greater percentage of people are selling, then a smaller percentage buying, then you decide where do you want to be. Do you want to be in the majority or be in the minority? So that is the concept or how we came out with the word forex sentiment. It is the ECN brokers who are able to give us this data. Now, enough of today's information. I'm sure I have given you enough information that will help you as a trader to be able to choose the best broker. But if you want to trade with my broker, you may have to chat me so that I will be able to find out whether the country in which you are, your country is allowed to trade with that broker. I have brokers. I am an IB with not less than 3 brokers. I am an IB, so I can refer you to those brokers and I can actually talk on your behalf with those brokers. But before I can initiate that talk on your behalf and refer you to them, I need to first be sure whether that broker accepts clients from your country. If they accept clients from your country, then I can then go ahead to give you the details to sign up and then be in constant contact with them to help you to be able to get everything done for you fast. So, and I am an IB holder of about 3 different brokers, all right? But I cannot just recommend any of them to you now because I don't know your country. I don't know where you are located. I am in Ghana. So maybe if you are in Ghana or in Africa, I can give you my broker because my broker accepts clients in Africa, all right? But my clients, I have, my broker, one of them do not accept clients from US. Another one do not accept clients from UK. So the differences are there. So another one do not accept clients from the countries are many. So maybe later when we chat, and to be able to chat with me directly, you have to join the Telegram page. So go to the description of this video on YouTube. Go to the description. You will see the link to the Telegram page. Join the Telegram page and you will find my personal link over there to chat me on the Telegram page. So when you chat me from that personal link, we can be able to be talking, and then whatever help you need in terms of this explanation I've given you, I can easily tell you or do whatever I want to do. Now, enough about brokers. Now you know how we came to have online trading, which is retail forex trading. So once you hear the word retail forex trading, they are talking about online trading. You know how it came into existence. It took some companies or some commission known as the CFTC to come up with some bills, which was in 1974 the company was formed. Am I right with the 1974? I think so, yes. I think they came into existence in 1974. Yes, that's true. So they came into existence. The US government formed that commission to regulate all the forex activities in US. And they came out with bills proposing that we need to modernize forex trading. We need to take it to the internet so that retail traders can sit at the comfort of their homes with their phones on their laptops and trade and do business. And lo and behold, the government accepted it and passed it into law or act. It became an act. And that is how come today we'll be able to have a lot of online brokers. And then out of that, we are doing our retail trading online. Is that good? And now you know the type of brokers we have. The no deal index brokers or market makers. This is just a sum up. The no deal index brokers, who are the STPs or ECN, and then the deal index brokers, who are market makers. So deal index brokers, market makers. So it's either deal index brokers or market makers. It's just different names but referring to the same people. So you can either call them deal index brokers or market makers. That is them. And then we have the no deal index. Under the no deal index, there are two under that. That is the STP brokers and then the ECM plus STP brokers. That is that. Now let's go to our review for the week. Today is 30th, Saturday. The week has ended. Tomorrow, the week, Sunday, right? The market opens here in Ghana Sunday around 9 p.m. GMT. So in your country, maybe that might be Monday to those in Australia, because the Australian session is the first to open. So let's see what is going to be our forecast for the week. And this is where you need to get your pen and paper ready so that you can write the pairs that I have for you in this week. So take your pen and paper or take your jotter, and then let's look at the currency pairs. Now this week, I'm looking at some currencies to be very strong, and some currencies will continue their strength. Now Euro, as you see, is on the up move with some currencies. Last week in the review I gave you, I told you that the traders, investors had gone into safe haven. They had gone to put their monies into safe haven. And it is now time to go back and take their monies because of Corona. Initially, they decided to go and put their monies into the safe haven currencies because of coronavirus. It's a pandemic. It's an emergency. And you don't know the outcome, how the outcome will be. So you need to run into safety. And once you begin to see the headway, then you can now go back and take your monies. And we have all seen that. JPY is losing strength. USD is losing strength. Chef is losing strength, because these are the major safe haven currencies. And because investors are pulling their monies, converting their monies back into their currencies to use it for their businesses, we are seeing some weaknesses in these currencies. But that wouldn't be so long. Bear it in mind. This is not going to be forever thing. It's going to just end after this thing normalizes. So very soon, USD, JPY, and Chef, they will bounce back. But for now, especially, you will see that Euro has taken USD very up. Euro USD has been on the buy. The same with other currencies, Euro, JPY, and the rest. So you see that some of these safe haven currencies are weakening, just like I predicted in last week's video. Now, last week's video. So now, what are we doing this week? Euro against safe haven currencies will only have a little pullback, and then the up move will continue. The strength of Euro is going to continue, but the beginning of this week, we are going to see a little weakening of Euro, and then there will be a pullback, but a little, and then Euro will continue its way up again. So take note, Euro with the safe haven currency, this is what you should know about them. So when you are using your trading tool, currently, if you are seeing oversold, or if you are seeing overbought currently, there might just be a little drop, and then the up move will continue. So take note. Don't be greedy to enter into the sell so much, because there might only be a little pullback, then the up move will continue. Euro against the safe haven currencies. Take note. Now, I told you in last week's video that GBP and then CAD, right, were going to be very strong, and you saw it. GBP has been very strong, CAD has been very strong. Now this week, which currency am I tipping as my stronger currency? I'm not saying stronger, but which currency am I tipping to be strong? I'm still tipping CAD. Yes, I'm tipping CAD to be strong, and I'm tipping NZD NZD to also be strong this week. I'm tipping CAD and NZD this week to be strong. And sometimes when NZD becomes strong, AUD also gets little support. But I can't be sure this week. But all I know is that NZD and CAD, I'm tipping them to be strong this week. All right. Now, in the course of the week, we will be able to update you on the Telegram page as to whatever is happening. But that being said, these are my currencies. This week, I'm giving you 8 currencies for the start. Or is it more than 8? 1, 2, 3, 4, 5, 6, 7, 8. Yes, I'm giving you 8 currencies, which when the market opens, we are going to deal with them. All right? We are either going to be selling them or buying. So take note. Now, I have already shown you in another video how to calculate your TP and stop loss. So if you haven't gotten that yet, go back to the channel. Go back there and then you will see it. You see the video, you can watch. I think I'm getting call. Okay, I think. All right, so let me just finish. I think the hotel breakfast. Okay, I'll come. Anyway, so let me finish, and then we can end. The call is coming for breakfast and stuff, but let me just finish and then we go. Now, with the 8 currencies, these are the 8 currencies. We're going to take Euro NZD this week. We're going to take NZD CAD this week. We're going to take NZD Chef this week. We are going to take NZD USD this week. We are going to take Euro CAD this week. We are going to take CAD JPY this week. We are going to take CAD Chef this week. And then we're also going to take Euro AUD in this week. So this week, these are the currencies I'm just going to give signals on. Euro NZD, NZD CAD, NZD Chef, NZD USD, Euro CAD, CAD JPY, CAD Chef, Euro AUD, and then I think I forgot one, AUD NZD, AUD NZD. So these are the pairs we are going to trade this week. Now, are they going to be buy or sell? And what TP and stop loss should you give? Now, let's look at the signals, whether buy or sell. Now, Euro NZD, we are going to sell. When the market opens, we are selling. Euro NZD, sell. NZD CAD, when the market opens, we will buy. NZD CAD, we will buy. NZD Chef, buy. NZD Chef, buy. NZD USD, buy. Euro CAD, sell. Euro CAD, sell. CAD JPY, buy. CAD Chef, buy. Euro AUD, sell. AUD NZD, sell. Now I take it again. Euro NZD, sell. NZD CAD, buy. NZD Chef, buy. NZD USD, buy. Euro CAD, sell. AUD NZD, sell. CAD JPY, buy. CAD Chef, buy. Euro AUD, sell. Now what should be your TP? Now Euro AUD is a very volatile currency. So Euro AUD, since you are selling, give it a TP of 200 pips, a stop loss of 100 pips. It's a very volatile currency. If left to me alone, I can even give it a TP of 200, a stop loss of 200. It's a very volatile currency. But let's take our 1:2 ratio. 1:2 ratio. So Euro AUD, 200 pips TP, 100 pips stop loss. CAD Chef, we are buying 80 pips TP, 80 pips TP, 40 pips stop loss. CAD JPY, we are buying. CAD JPY, 100 pips TP, 50 pips stop loss. Okay. AUD NZD, sell, we are selling. 80 pips TP, 40 pips stop loss. Euro CAD, also one way or the other volatile, but Euro CAD, 100 pips TP, we are selling Euro CAD. 100 pips TP, 50 pips stop loss. NZD USD, 80 pips. NZD USD, 80 pips TP, 40 pips stop loss. NZD Chef, we are buying. 80 pips TP, 40 pips stop loss. NZD card, the same. 80 pips TP, 40 pips stop loss. Euro NZD is also another very volatile currency. Euro NZD, very volatile. So Euro NZD, give it 100 pips stop loss, 200 pips TP. Yes, 200 pips TP, and then 100 pips stop loss. That is it. So today, Saturday 30th, this is the forecast I have for you. Please subscribe to this YouTube channel, Leading Forex. I'm Kofi. I'm doing this video just for us to be able to know much about what to expect in the market when the market opens. So once the market opens, that will be for another month, a new month. May has almost ended. Today 30th, May has virtually ended. So from Monday will be a new month, June. I welcome all of you to June. I wish all of us the best, and we pray that the month of June will also give us the best pips we want. And some of you are asking that why have I resorted to doing this? I have realized that this video thing is really helping. That is why I am doing that. And it's also giving us a lot of education, and people can always come back here to refer to certain things or information they need. And I feel this is one of the reasons I should do this. All right. So thank you. I'll meet you again the course of the week on the Telegram page. Be safe from COVID-19. Make the profit. Make the money. All the best.